Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
Welcome to The Wealth Flow. My guest today is Mark Updegraff. Mark is the CEO and founder of Updegraff Group Realty, Updegraff Management, Updegraff Services Incorporated, and Raise Capital. He's an active investor, broker, and operator. As a broker and an investor, Mark has been involved in over $200 million in real estate transactions. He's led peak producing real estate sales teams and managed a leading local boutique brokerage. He also holds 2 active broker's license in the state of New York. And at Raise Capital, Mark oversees due diligence, acquisition, capital raise efforts, and investor relations, as well as asset management for his firm. Mark, welcome to the show.
Hey, thanks so much for having me. I'm really excited to be here.
Yeah. I like to start with just kind of, where you grew up. Have you always been in the New York area? And then, kind of what led you to real estate?
Sure. I grew up in central Pennsylvania in a little town called Williamsport. It's about an hour north of Harrisburg. And we were known for the Little League Hall of Fame or Little League World Series Hall of Fame. They have it there every year. So this time of year, you can catch a game in Williamsport on TV. And I actually came up to New York to go to RIT, Rochester Institute of Technology. They're pretty similar as far as like when they were built. Both Rochester and Williamsport were a lot of turn of the century architecture. So my wife and I really liked that, the old houses with all the ornate detail. And Rochester was a good size, where Williamsport, population 40,000, it was kind of too small for us. And Rochester was big enough, but it wasn't like too big that it was annoying, right? So we could still pop around. So we joke that you can get anywhere in Rochester in 10 minutes. Parking's never really an issue. You might have to walk a couple minutes. That's it. So that's why I came up to go to RIT, fell in love with Rochester. I bought a couple rentals and eventually transitioned over into real estate full time after I left my imaging science, technical W-2 job.
Okay. How long did you do the W-2 before you switched over?
Well, I went through my bachelor's of science. I worked in industry for a few years after that, went back, got my master's of science, and then worked in industry probably for about 2 years after my master's. And I got laid off, which I had to make a choice. There's a lot of people with a similar degree to me that were also laid off at the same time, about 2,000 people in my company. So I knew that I was on the market at the same time all these other people were on the market for a similar background. And it was just oversaturated because, Kodak was laying off, Bosch and Lomb was laying off, Xerox was laying off. My company had laid off 2,000 people, all imaging people. So I told my wife, look, if you want me to get a job in imaging, which is my background, we're going to have to move. And she really liked her career. And she said, hey, you've got these rentals. Like, what are you going to do with them? Are you going to sell them? Are you going to try to find a manager? And that's when I kind of went down that path of exploring what management services looked like, because I had just been self-managing. It was only a handful of units. And the managers in Rochester were just really disappointing. And I knew that if I trusted them with my asset, it was going to be a bad situation. I could just read the writing on the wall. I could kind of see, because I interview people pretty thoroughly and I like to check stuff out. And talk to their clients, and I could kind of see like, hey, this is probably not the smartest idea to leave your stuff here with somebody else. So I told her I had a crazy idea to get my real estate license because it was a time in the market where things were ramping up. When I started, you could write an offer, cash, clean, no inspection, and the other agent would lock it up and you could go to closing. There weren't these like people trying to come in over top and snake the deal. Like it was still easy time, right? Coming out of '08. But I could tell that that was changing. And so as it was changing, my realtor, he might be a little bit slow to react to my phone call, and I would lose a deal because if you were the early bird, you could get the worm. And I really wanted to be the early bird and take advantage of some of these nice opportunities. So I got my license, but I still had to pay the bills, right? So I told her I would try to do sales, and she kind of laughed because she's like, "You hate salespeople." And I never would have thought I would have seen myself in a sales position, but I gave it the old college try. And my broker, after about 3 years in the business, he's like, "What in the world are you doing?" He's watching my sales just go through the roof. From somebody that's not from Rochester, I don't have any family here, and I'm like a mid-20s, so most people don't think I have that much experience just coming out of college. And I was able to get myself up to like 10 million in sales, which in my marketplace, that's like somebody's really hustling. I think I did 87 transactions to get to $10 million. So it was a lot of grinding. If you do the math, like my average sale wasn't that high, right? I was doing a lot of lower sale prices, and it was a lot of work, and got his attention. He's like, "What are you doing?" And I'm like, "Well, I'm marketing." And so I was building my brand, I was building my reputation, I was doing some marketing, and then I was very diligent about, anything that came into me, I followed up with immediately, and I took it to a sale. And so I got really good at sales, and I didn't have time to manage my properties anymore because I was so busy doing all these sales. I was literally considering hiring a friend to be a driver for me so I could like do computer work, like write contracts and stuff while I was going from appointment to appointment. Um, but I realized I couldn't manage the properties anymore. So I hired a couple people on staff, and I taught them how I managed. I kind of built the systems myself. They were younger, and they saw what I was doing on the sales side, and they got pretty good at management. They learned the ins and outs of properties by coming with me, and I explained construction and stuff like that. And they said, "Hey, I really want to be in sales. I don't want to just make a few bucks for you as your manager. I want to get to the sales side." So that's when I launched the brokerage for the sales. I had originally launched it just to have the management company and be able to help other people that were coming through me as a broker that were investors. They said, "Hey, we need management services." And in order for me to manage those properties, I had to be a licensed broker. So that's kind of my story in a nutshell.
Well, tell me about the brokerage deal, though. So, like in Texas, I'm a real estate broker as well, but I don't have two licenses. Why do you have two? Is one of them as a selling agent?
To have two.
Okay.
Yeah. So I did it for liability separation and to keep my books completely separate, so I could have the companies compartmentalized and one just focus on sales, and then run that budget based on sales, and just keep everything completely separate instead of like commingling stuff that's coming in from management. When you get into real estate management and sales, even there's a lot of stuff going on, and I wanted complete separation from the two, so I could look at group and see how group was doing, and then I could look at management and see how management was doing, and then also just have a separate entity that I could, if I wanted to list stuff on the MLS, it would show up under a different, a management firm versus a sales firm, and then kind of for the branding as well, because a lot of people, if you're branded as a management company, they might not want you to do a sale of $1 million house. And I didn't want to exclude people. Oh, these guys manage on Avenue D, which is, a pretty bad area in Rochester. Why in the world would we give them a listing for $1 million on East Avenue?
Sure. Yeah.
So I just wanted to like separate them and then be able to brand them independently and have them have lives of their own. And I think that was a smart choice.
Yeah, it makes more sense now. And as you were saying it, I'm like, oh, wait a minute, you have also a separate license for your LLC as well. So, but yeah, just curious more than anything else on that. And so you started on the sales side, then got to managing. When did you go? I assume maybe it's a bad assumption, but I assume that you initially started with another firm and then opened up your own, or how did that work?
Yeah, in New York State, you've got to have 2 years experience and you got to do a certain amount of sales. So I actually was able to get it a little bit less than 2 years because my sales were high enough. So I think it was like a year and a half. I was able to apply for my broker's license. But yeah, I hung it at Remax. I operated under their license until I had the credentials to go off and get my own broker's license.
Okay, cool. And as far as both of those are all still going, or all those companies are still going and actively?
Yeah, we've added on, so I've got the two brokerages, management and sales. And then we've added on a services division that's Updegraff Services Incorporated, where we're general contractors. And, we do a lot of stuff in-house. I've got a team of guys that, are carpenters primarily, and we'll outsource the skilled trades like electric, plumbing, where you have to have licenses in the city to perform those tasks. And then, things like roofing, I don't run a roofing crew, but I've got subcontractors that I've got a really good relationship with that I've worked for years, and we can get good discount pricing based on our volume, right? So we do probably 50 roofs minimum per year, and having that volume and having those relationships, I can do a higher quality, a longer warranty, and still be competitive in the marketplace with people that are using like a 30-year shingle. I'm using a 50-year shingle, and I'm giving a 50-year warranty, and I'm still competitive against these guys that are doing 30 years. So working in volume has been really good for that. The services is standalone, and so it can help people that are buying and selling. Right, we might have a seller that needs a new kitchen or something, or we might have a buyer that wants to put in a new kitchen. So it can service all those guys, but then it can also service my investors that might be doing a fix and flip. They might be doing buy and hold. That's a value add where we'll go in and we'll renovate all the units for them to get their rents up. So it's been good to be able to control your own destiny, right? If you're kind of subject to the whims of all these other contractors, as diligent as you are, it's still, things don't happen as quickly as you'd like. So I liked being able to have that control and bringing the GC in-house. And I'm also able to use them as a developer, right? So if I purchase something, like right now I'm working on a 16,000 square foot office building conversion in the downtown, where I'm converting that into luxury apartments. So we're the GC firm. I'm the developer. I hire my own firm to GC it, and they just take it away from there.
That's awesome. That's really cool. So you got all ends of the business that you are going to need to successfully. I'm sure it's helpful for your clients as well that you're doing the property management for, just to be able to have reliable, contractors to go to and perform any work that needs to be done.
Yeah. I mean, we've vetted pretty much every contractor in Rochester we've worked with, and we know the ones that are really good and that can deliver. My father raised me as a handshake person, so I'm really looking for those people that they shake your hand and they give you what they say they're going to give you when they say they're going to give it, and they don't try to take on too many jobs at the same time, where then now you can tell that okay, they were there for a day and then they weren't there, and now when are they coming back to finish? They come in, they do the job, and then we can get on with our lives.
Yeah, makes sense. And then when did you go from, running those businesses to raising capital for, I think it's multifamily, right? Is that what you're specializing in?
Yeah, multifamily. So I've done JVs, for the last decade. And so that's kind of like the same thing-ish, right? It's a little bit scaled down, and your JV partners technically have a role more so. So I wanted to get more formal because I felt like a lot of my JVs didn't have the experience that they needed to really participate as a JV properly. So that's when I got involved in a more formal syndication process of raising capital and being the general partner.
Okay.
So I've been doing that for the last couple of years.
Nice. And maybe even starting with the GP, the joint venture ones, were those all multifamily as well?
Mm-hmm.
And all in the Rochester
I've been strictly
area?
residential. Yeah, pretty much in the Rochester area. I've done some work in Pennsylvania and like Arizona and stuff, but I would tell you like 90% of what I do is here in Rochester, just because I know the market so well.
Okay. And as far as what you're currently looking for, or what kind of projects do you try to take on? Are you looking for value add? What is kind of what your buy box is?
I love value add. You can tend to get the best price on that. In the the market that we've been in, a lot of people have been overpaying for these value adds. So I have been a little, hesitant to jump in and overpay for something that needs a lot of work. So I would tell you for the last couple of years, I was almost more turnkey oriented because I'm like, these guys are paying huge premiums for everything. And, I think that the delta between a turnkey and a value add is more economical for me to just go turnkey probably for the last 2 years. I think we're switching back like right now where I think I'll be able to pick up some of these value adds and actually get a decent price because our market has definitely cooled off. Our volume is at about 25% of what it was last year. And the sellers are starting to realize that, if they want to sell something, they're going to have to come down in price. So I'm looking forward to that. A lot of the foreclosures, there's been an uptick. There was that pause from COVID. It was really slow after COVID coming back. They were kind of trickling through. Now they're starting to be a lot more prevalent. So my focus right now, I'm doing a blind fund for foreclosure properties in the Rochester market. So we'll be positioned really well as some of these larger multifamilies come. And if it's not large multifamily, I mean, we'll pretty much take anything that makes sense since I have a good experience on the retail side as well. So some of them might come through and end up being fix and flips where we just put a little bit of money into them, put them back on the market and sell them and turn that capital over. And then others will be the value add where the play is to, improve them, stabilize them, and then bank refinance them after, maybe 2-3 years.
Okay. And those are single family or multifamily?
We focus on multifamily, but, we'll look at any deal, right? So I look at every foreclosure that comes to auction and do due diligence on it. And I tell you, the majority of foreclosures are going to be in that like 1 to 4 space. But that's not to say that's all there is.
And describe maybe a little bit more in depth as to what the blind fund is.
Yeah. So a blind fund is where your investors they're looking at your memorandum and they know what your business model is, but you haven't identified any properties specifically. So versus raising for, 123 ABC Street, showing them what the fundamentals and the projections and what the IRR is going to be. We're saying, hey, here's a track record of things we've done in the past. And that's what we're looking for, similar things. But the fund is blind because we don't know exactly what those things are going to be, right? I've got to do the due diligence. I've got to go to the auction. I've got to secure the contract. I've got to close the deal. So nobody knows what those properties are going to be until we've actually acquired them.
Okay. And these funds, you have multiple properties in, you're leaving them open for a period of time and allowing to kind of buy as you go and as you build up the capital.
Yep.
Cool. And what are you currently, obviously anything that happens to be a good deal, but are you strictly focused on the foreclosures right now? Or are you looking at, anything else that potentially could, fit what you're looking for?
Yeah. I've been doing it long enough that I've got good relationships with people. So they bring me stuff off market. Typically the stuff on market that we're seeing is still, there's a huge bid ask spread. And, you do the underwriting on it. It's just not even close. It's not even close enough to really waste your time sending them an offer because they're just not going to take it. So I would tell you, foreclosures are good. Wholesalers, we've got a relationship with a lot of those guys that can bring us stuff that still makes sense. That's value add. And then just working with people directly. So I've got a group of guys that I'm coaching and, I bring them in, I teach them how to make the calls and then they are doing the bird dogging for me because they don't have a really good buyer's list set up. So I pretty much show them what I'm looking for. And that way, if they can find it and they can get it under contract, then they can make a wholesale fee and they've already got the end buyer, which would be me.
Yeah, that's great. Oh, that's really neat. And as you mentioned COVID and you mentioned, the foreclosures kind of pausing there. Tell me a little bit more about what happened. What were you guys experiencing and seeing with, renters not being able to evict, any of that stuff? And how long did that last out in New York?
I mean, it's still ongoing, I would tell you. So our program, I don't know if it's called the same everywhere. It's called ERAP. And, a tenant would go in, you'd try to evict them. They've got a big balance. The judge would say, hey, have you applied for ERAP? No, I haven't applied for ERAP. Okay, we're going to adjourn. Go apply for ERAP. Come back, 3 months later because things were so backlogged. Getting in the first time was like 4 to 6 months. Then they adjourn you for 3 months. And then you go back. I literally have people on our eviction board that are still from COVID. Now their balance isn't from COVID because they've received different ERAPs along the way, but the ERAP has never been enough to completely settle their bill. So they've always been a default. And previously, if you took the ERAP, then you were forced to keep them for 90 days before you could start the process, right? So you're like, okay, damned if you do, damned if you don't. But they actually made it illegal for you to evict them. Like you had to take the ERAP. You couldn't even say, hey, I don't want the ERAP. I just want to get this person out. That wasn't an option until maybe a month ago. So, they would go in for eviction. They would have not applied. Then they apply. So you're already out 8 months of not getting anything minimally, if not more. And then, maybe they get a check, maybe they don't, because some of them are just deadbeats that aren't even eligible. They're making enough money. They're just spending it on whatever they want. And so after that process concludes, then you can get your warrant of eviction. But our judges are so liberal out here that even today I was talking to my property manager. I've got one from a foreclosure that I purchased in November. And the way that the foreclosure process works on some of them, this was a city foreclosure, you don't get marketable title until like April, right? So I finally got title in April. Can't really do anything to the property or with the tenant until you have legal title. So April, we start the process. He talks to us once. He says, I inherited this house from my mother. I've got depression. She's dead. And then he just refuses to talk to us ever again. Like it was the only time he would answer the door. And so we had to put him in for the eviction. Would have loved to try to work something out with him, but he just, didn't want to talk to us. So we are finally now getting him in court, right? So we started that in April, and now we're in August. So May, June, July, August. That's 4 months. And we get him in front of the judge, and the judge says, hey, what's your excuse? Like, what's your reasoning for not paying rent? He's like, I don't have one. And so the judge says, all right, adjourned. And he adjourns the case. And so now I've got to go back in another month. And I'm like, why? I got to talk to the attorney. I'm like, why would the judge even just adjourn this? Like, he's got a public defender that can defend him. So now it's adjourned. And a lot of times, I've seen around, like, if it's like near Thanksgiving or something, you've already gone through, you've been through like 3 different times. You're going on a year of unpaid rent. The judge will be like, okay, well, it's Thanksgiving and then it's going to be Christmas. So we're going to, we're going to give you the warrant of eviction, but we're going to stave the warrant until January 15th. Can you believe that? You're mid-November. You're mid-November, and the judge says, guess what? They're staying until the January 15th. There's nothing you can do about it. You're not going to get a penny. And they'll do it without prejudice. So you don't even get a judgment. So you can, not a lot of these people, you're not going to be able to get anything anyway, but they won't even give you the judgment anymore. It's without prejudice. The court system has just become a complete joke here in New York. So, I know there's probably a lot of people that are probably fleeing New York, or just, they've come into New York, and this has all changed since COVID. It didn't used to be this bad. When I started, you could have somebody out in 3 months. And, I did my evictions back in the day, and I would go in and, even with the liberal judges, they would try to get me to agree to do something, like to give them extra time. And I'd say, Judge, no, I'm here for an eviction. This is why I came down here. That's what I want. I want an immediate warrant of eviction. And then they would say, okay, fine, you can have it. And they would give me the immediate warrant of eviction. But I had to like ask for it and say, that's why I'm here. You got to give it to me. Fast forward today, you don't even have the option. You're like, yeah, tough. You're not getting it. We're staving the warrant.
That's crazy. That is crazy. Not how it is in Texas. We did pretty good with going through COVID. There were programs out there that kind of could make you whole if somebody got too far behind. But yeah, 3 months and you can get them out down here. So interesting. Do you feel like they're of the businesses that you manage, or of the different units that you manage? Is it a substantial group of people that just kind of play the system and don't pay, or is it manageable and it's just, hey, this is part of the deal? We're expecting that we're going to have X percent, that we'll have to go through this, tug of war to try to get them to go out.
Yeah. So we're much more picky now than we were when we started out as managers, right? Because when you're in property management, you've got to have a critical mass of units. Otherwise, you're kind of bleeding cash. So I knew when I got into the management, I was going to be subsidizing it for a period of time until I had enough unit count to offset my overhead. So I would take some units that were in these areas where that tenant they know the laws and they're going to exploit it every second they get. And so, like, as I've gotten older and, I've personally never bought those properties. I've always been a location centric investor. So I'm looking for an area where I can land a great tenant that's going to have respect for the property, that's going to pay me. But a lot of people that come into the market, that'll come to us from other management, they've already made their mistakes, right? They bought these properties that they probably shouldn't have in areas that they probably shouldn't have. They've had poor managers that have let the properties get worse. They've had the wrong tenants that have trashed them more. And so they've got to fix all these problems to get it back online and get it dialed in. And sometimes the location is just not conducive to ever get a good tenant. So I'll advise them, hey, maybe you should think about selling these, and then we'll position you in a better area. As far as people that come to work with me, I give them the same information when they come, and then a lot of times, unfortunately, they just don't listen to me. Even though that you would think they would trust a professional that's been doing it for 15 years in this marketplace, they really focus on cash flow, and they really, I want the cash flow, I want the cash flow. And I tell them it kind of breaks down. When you get into the deferred properties, you're going to have more deferred costs, you're going to have eviction costs, you're going to have bad debt, and I don't think they adequately compensate for that in their pro forma analysis. They think that, okay, I'm going to use 10% vacancy, I'm going to use 10% capex, whatever their methodology is. It's just not conservative enough when you get into some of those areas, and they're overly conservative when you go to some other areas where we're going to have a lot less vacancy, deferred debt. So that's kind of the problem. So as we take on units, we try to get a good owner. So if it's a good person that they're like, hey, I want to put money into this unit, I want to have a good tenant, I want to do this the right way, we'll take them and we'll improve their property, we'll get them the better tenant, and they'll have a lot less headaches. But if it's somebody that's just trying to squeeze every nickel out of the property, that model doesn't work. So we don't take those units under management anymore.
Yeah, that makes sense. Geez, that's crazy how different different markets are. So yeah, interesting. And I've seen quite a bit going up for sale out in New York. Whether it be the taxes, whether it be just the politics, it's kind of crazy. But you have no interest of trying to do anything anywhere else. It's you're kind of, I guess you're kind of ingrained there right now with all the different businesses, and this is where you're going to stay.
Yeah, I mean, people need housing here, and we've got really good systems in place. I've been working on my processes and procedures for 15 years, and we've got them really dialed in. You only make money when you buy, and that's what I try to coach people on. So I'm not just buying whatever. I'm very conservative, and I'm willing to wait for the opportunities to come back to the marketplace. I've been still picking up things here and there over the as things have ramped up, especially over the last 3 years. It's not like I've not put any units on, but I'm doing a development, which I figured, if people are paying this huge premium in the marketplace, why don't I just go ahead and do something that's going to be brand new? And I'll get top end rents. It's in a superior location. It's got lots of parking. So that kind of shifted my model while I'm kind of waiting for the multifamily market to come down to a realistic level. I'm not interested in paying the prices that are advertised right now.
Yeah, that's neat. So, how have you done any completed development deals? And what are you seeing there? Do you like that model?
Yeah, so I'm taking existing stock and fixing it up. So I've been doing it just on a smaller scale over the years. I first started with single families where I'd pick up a single family for $20,000, but in an incredible location, and then just do everything to it, right? New siding, new windows, new roof, basically rebuilding the house with the exception of a little bit of framing, right? And maybe a little bit of structural stuff. So I've been doing it for years, and I've just kind of moved up on the hierarchy of unit count. So I just finished one that was like a 7 or 8 unit, and now I'm doing the 16,000 square foot. The 16,000 square foot is a full gut, and it was a nice building that's pretty much clear span concrete construction. So I don't have a lot of columns in the way or anything. So I could really have good layouts for the units. And so I like that project a lot. The 7 or 8 unit that I just completed, it was like an old mansion that had been cut up into these units. So that was a challenge because the layout, especially with what people want today, it's a little hard to provide that. But we were able to clean them up and improve the rents, and that was a smaller value add than obviously this office conversion that I'm doing.
And these are all within your fund, all of these that you're describing now.
Oh no, those I did personally.
Okay. And so within the fund, what type of property are you looking for? Is it something similar to what you do on the personal level, or is it larger? Or
Yeah, I'll look for the best opportunities. I probably won't do something like Liberty Pole because the it won't be as lucrative for my investors, right? I did it for myself because I'm a location centric guy. I know that I'm positioning myself in this like prime area that over the next 10, 20 years, the value is just going to go through the roof. And it's kind of, you can't really sell that to an investor, right? It's speculation. I'm fine speculating with my own money, but I'm not going to speculate with somebody else's money. I know the cash flow is going to be on the lower side because we are doing so many improvements to it. We're doing like waterfall islands and like nice cabinets. They're luxury apartments. So like when you spend a lot of money, the rents really, I could have made more money by doing less luxury finishes, but it's something that it's going to be in my portfolio. I'm going to own it forever. And I wanted that location I know is going to really go up in rent value, go up in just in value in general.
Yeah. That's I like that. And I like the fact that you're saying you're going to hold it forever. How about right now, as far as your personal portfolio, how big of a portfolio do you have, and kind of what are you aiming for?
I'm closing in on 100 units. So I'm looking forward to, finishing up this development project. I've got a couple other buildings that are on my back burner that I got to get finished. So I'll get those all buttoned up. They are pretty heavy value adds. One's commercial, the other are residential. And then once I've done that, then I'll figure out what's the next step. But I think it's going to be larger multifamily.
Okay. Yeah. Especially if you've got the crew and everything to be able to do the value add and all the stuff. That's a huge advantage, as you know.
Yeah. There's a 52 unit real close to my office that I'm converting that I've got my eyes on. The seller still wants too much money for it. But he's very wealthy. He doesn't even live in Rochester, and he's just cheap, and he doesn't want to sell it because he overpaid for it when he bought it. He was sold a fake bag of goods from somebody that was, quote, his friend. His friend was lying to him. And once he got it, everybody vacated, and he's got like 3 or 4 tenants in this monstrous building. And it's been like that for years. And, we go back and forth, and he knows where I am on price. I know where he is on price, but he really likes me. So I'm hoping that, within the next year or so, as I finish up my stuff, he'll finally be ready to let it go. And then maybe that'll be my next project.
There you go. Okay. Sounds good. What about how much of an advantage has being able to just manage on the property management side? And then do y'all mainly do smaller multifamily or in single family as far as your property management, or do you take on larger apartment complexes and stuff as well?
Yeah, so the majority of our portfolio is going to be in that 1 to 4 family space, probably 60% of it, and then 40% will be in the the commercial residential. In Rochester, there's a lot of like mixed use properties where there might be like 1 or 2 commercial storefronts, and then half dozen to a dozen residential units on top and behind it. So we've got quite a few of those in the portfolio that we manage for people. I'm looking to get into bigger stuff, but they tend to be mom and pops that self-manage. So I do a lot of prospecting, and a lot of them are owned by the same people. There's not that many owners of these bigger complexes, and I haven't got anybody to hire me for those yet.
Right. Okay. Interesting. And as far as so you got this blind deal coming up. And you're currently raising capital for that one?
I'm just finishing up the PPM on this new one with my attorney.
Okay.
So we should be ready to go I'm hoping within the next couple of weeks we get a big city auction in November that I'd like to be capitalized for.
Okay. And then what about as far as what you're putting in your underwriting? Has anything changed over? I mean, obviously the market's changed, but what are some of the changes that you're making as far as underwriting?
I'm still trying to be super conservative on rents. I have a feeling that they're going to pull back a little bit over the next couple of years.
Hmm.
So I'm still using my conservative rents, but they're definitely higher than they were a couple of years ago. I would tell you I was probably on average at like 9 to $1,100 on a 3 bed a couple years ago, and now everybody's at like 15, $1,600. I have a feeling it's going to come back a little bit, probably meet in the middle somewhere. So I've been conservative on those in my underwriting for sure on all unit sizes. You know, probably about 100 to $200 under the current like quote market.
Okay. And then what about like as far as debt? What are you usually utilizing to take down these deals?
I'm doing fixed for 5, adjustable rate mortgage.
Okay. Okay. And I know I've got that on one of our mobile home parks, and it has gone up a little bit in pricing with the interest rate. So hopefully things will come back down a little bit, but it seems to be heading in the wrong direction there. So
I had a reset recently that took some significant money out of my cash flow, and I've got I don't think I have another reset for 2 years, and then I've got another reset in 3 years. So I'm still okay. I found a product. Your listeners might be interested in this. If you shop around, like I didn't realize it. You got to literally call like every single bank and ask them what they have to offer. I found a
mhm.
local credit union that did a 15-year fixed, and it was a portfolio loan, so I could put a bunch of different properties in it. And they've got a max relationship size for that product. I think it was 1.5 million is all you can do. And once you have that, they won't originate another one. So luckily, I got that thing through and underwritten and closed while rates were low. And I'm looking at 15 years of just like, don't worry about it.
Yeah, that's
So that
awesome.
that felt good. Yeah.
Yeah, for sure. All right. Well, and then anything else that we should know about your businesses, kind of what you have going on?
I'm an open book, so I like to help people. I don't charge anybody for helping them out. So if they've got a question, technical question on whatever, they can always reach out to me. The kids that I mentor right now, I don't charge them. I know that they're young and just starting out, so we have a lot of fun doing it. I kind of just learned this on my own without any coaching or mentorship. So my methods might be a little bit different than other people's, but there's a lot of similarities, because I'm part of a local FRIA, and I started to get a lot more active over this last year. I put my head up and looking around. I'm like, okay, I've been working too much. I need to be part of the community. And so going to
Mhm.
those meetings and then listening to what the other people are talking about, there's a lot of similarities. So it's been fun year doing a lot more networking.
Yeah, that's neat. And that's good that you're giving back to, and helping them. What about as far as when you're out looking for deals? What are you finding has been working the best? Is it phone calls? I don't know what other methods you use, text, whatever it may be. What's working for you?
For marketing,
Yes.
I'm a big proponent of warm calls if you can. Do a lot of cold calls and then just having lots of funnels set up, right? So um, I've got ebooks that I've got that I'll drop at different places depending on what the audience is and what they're looking for. And you want to be able to start to get your phone ringing. So I think what is advocated early on starting out, you might not have a lot of money to invest in like buying leads or paying for Google AdWords or any of that stuff. So your immediate sphere is where you start, and you want to let everybody know what you're doing, but they got to know that you're doing it seriously, that you're professional, that you're like 100% committed to it. So it can be a little bit of a hard thing to do if you're still working at W-2, and they might think, oh no, you're an engineer. You're not a real estate professional. But I would still start there. That's going to give you the courage and the confidence. You know, you can talk to some people that you already know, and it doesn't matter really what they think. You're just kind of getting your chops under you as far as talking to people about real estate. Join your local FRIA so you can meet some of these guys that are a couple steps ahead of you. A lot of times they won't mind, and because we've all been there. We're all trying to move forward in what we're doing, and when you find somebody that's just a couple steps ahead of you, they're like, "Oh yeah, I remember when I was where you're at. Let me help you get to where I'm at a little bit easier than I did because I can help you make these steps in the right direction." So definitely take advantage of your local RIA. Um, I love LinkedIn. I know other people are really good on Facebook. I never really was a Facebook person, so I don't really use that platform very much, but I've had a lot of success on LinkedIn, just being very consistent with my messaging, knowing who my avatar is and continuing to talk to that avatar. That doesn't mean that's the only person that's going to come into your funnel and potentially lead to a sale, but you got to be able to differentiate yourself from everybody else that's talking about real estate. So that's why you have an avatar, and that's why you try to help that avatar. So producing consistent content, whether it's on LinkedIn or if it's on Facebook or Instagram or wherever you're doing it, uh, keep doing that. You'll think that people might not be listening, but you'd be surprised. There are people listening, even if you're not getting comments and you're not getting likes, they're there. And then you'll run into them in real life, and they'll say, "Hey, I saw this video you did, or I saw this blog post you did. I really liked it." That'll further incentivate you to continue your consistency. And you won't get results overnight, probably, but I would tell you, if you make a concerted effort and you do it for a minimum of, let's say, like 3 months, you're going to start to get traction. You'll probably get your first lead in like your 3 to 6 month time frame. And then as you build, your leads will organically start to come at a little quicker rate. And it's all going to depend on your messaging and all that. But it's a free source of leads. So I would definitely invest in that. And it's also helping you provide to the community, right? So all of your content should add value, and then they're absorbing your value and they're thanking you for that value by giving you their business, because now you've become that expert in that space.
Yeah, I totally agree. Where can people find out more about you? And then I've got some additional questions as well, but just, where are you active? It sounds like on LinkedIn for sure, but where else?
Mm-hmm. Yep. So my cell is 585-314-9790, 585-314-9790. Emails get lost, so shoot me a text. You can go to raisecapital.com, RAZE capital.com. And if you want a guide on marketing, you could just do /ebook. And I've published an ebook where you can kind of learn, I learned the marketing side through real estate sales, but marketing crosses all disciplines. So I've had a really good transition of taking those fundamental things that I learned in the sales side of the business for real estate, for retail, and then applying them to other things. So I've kind of outlined that guide for capital raisers. So if you're thinking about doing some capital raising, and you want to know more about the marketing piece, I did that there. So you can get that at /ebook.
Okay. And then tell me a little bit more about, your town, Rochester. What's there to do when you're not doing real estate? What happens out there?
So let's see. We've got Lake Ontario. We've got a lot of different bays that come off of the lake. So boating is huge. I like frisbee golf. We're kind of a mecca for frisbee golf. We've probably got 20 different courses within a 20-mile radius. We're going to be hosting, I think, a pro event coming up at the end of the month. So that's going to be pretty cool. I like to do that. We've got a lot of, we're very close to Adirondacks. So we'll go up into the Adirondacks to do some hiking and some camping. And other than that, skiing in the winter.
Yeah.
You gotta stay active when it's freezing cold and lots of snow.
For sure. So there's some good ski resorts up there as well.
We've got a decent ski resort. It's about 45 minutes. If we want some real skiing, we'll drive to Vermont.
Okay. Cool. Sounds good. Well, if you had somebody, and it sounds like you'll probably have a great answer for this one, but if somebody that's maybe just starting out in their investment career, what advice could you give them?
Just save up your capital. Be very diligent about that, right? So if you're used to going to Dunkin' Donuts and buying a coffee, just buy beans, make your own coffee, and then take that delta of whatever you were going to spend on your iced coffee, put it into your savings account and save it for your first investment. I think a lot of people come into the real estate side as newbies and they get allured into the wholesale ideology of, being a wholesaler and making money through real estate, through wholesaling. I think that's a very difficult first approach. I think a buy and hold something, like get an asset under your belt, whether it's a single family home or a 4-unit or whatever you can afford to get, just get something under your belt so you can experience it firsthand. And that all starts with saving up enough capital to do it. So if you're lucky enough that you already have a savings to do it, just pull the trigger, go for it. Definitely be conservative in your underwriting and make sure you have a good team behind you. But there's no substitution for actually doing it and then being able to say, okay, hopefully you don't make a mistake. But I think if you're conservative, the market is difficult, right? So right now, that's probably a hard statement. You're looking at me and saying, none of these deals seem to make sense. Yeah, you're going to have to be diligent. They're out there. You just got to find them.
Yeah, I agree. And I think, some of what you're doing as far as doing, approaching people off market just allows for that. You don't have all the competition coming in, hopefully in those scenarios. And, as you mentioned, you make your money on the buy. So what about
maybe your first wholesale deal is actually for you. So maybe you are doing the wholesale techniques, but it's more to source a deal for yourself.
Yeah, exactly. What about any book recommendations? Anything you've read recently that it's worth mentioning?
Yeah, Who Not How I finished, and that was great. I'm reading Traction right now, and it's really good. I'm about halfway through it. I just need to finish that one up, but I've been distracted with all these other projects that I got on my plate.
Yeah, both real good books. It's funny, I recorded another podcast a little bit ago, and that was the same. The Who Not How came up on that one as well. Very good book.
Mm-hmm.
All right. Well, Mark, I've really appreciated you being on the show and appreciate your time today. I think you've added a lot of value and just some really great recommendations. And, I don't, I certainly don't want to do any of the politics stuff with New York, but you got a rough environment out there that you're doing business in, and you're doing it successfully. So that's great.
Cool. Thank you so much.
Yeah. Thanks, Mark.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.